Good morning, everybody. I'm Ed Parcaut, and I'm usually here with Mike Kelly, and we're Real Estate Jerky Daily, but he is still vacationing in Mazatlan. Yeah, it must be nice to be so wealthy that you can go on vacations all the time, hire people to take over your Rotary presidency while you're gone. Anyway, just joking. He'll be back on Monday, and then we'll get our report back. Right now, it's just about the facts. All right, so today, as I said, this was Jobs Week. Our big thing's coming out tomorrow, which is the BLS report, which I call the Bureau of Labor Alliance Statistics. Anyway, let's get on the way. So, opening position, they're talking about if you haven't locked or whatever, it's floating into tomorrow's jobs report. Stocks are starting the day a little bit. They started a little bit higher, but right now we're down about 108 points on the Dow. Bonds are, down a little bit. Where are we at with the bonds right now? I'm sorry, I should have had this up for you, but what are you going to do? Things can get fixed in a second. We're down about 4 basis points. The 10 years at 4.43. So yesterday, the new Treasury Secretary, Scott Bessent, announced that they were going to focus on Treasury issuance on the short term. That means the lower 1 year, 5 year, 2 year, all those. And that's kind of what Janet Yellen did under her past strategy, but it was a totally different market condition. Back then, long-term yields were just over 1%, and locking in short-term rates led to costly refinancing at much higher rates. Bessent's approach makes sense now if rates are expected to decline. Issuing short-term debt allows the government to refinance at lower rates when yields drop. Additionally, Bessent and President Trump have expressed a desire for lowering the 10-year yields, which would really benefit us in the housing world because that has to do with mortgages and mortgage-backed securities. So that's kind of what's going on with the housing and, with the new Treasury Secretary. CoreLogic came out with their home price index. Home prices were essentially flat in December, just up 0.3% year over year. Home prices increased by 3.4%, maintaining the same growth pace for the 4 consecutive months. So we're not going negative. CoreLogic forecast predicts a 0.2% decline in January, but upgraded their 12-month outlook from 3.8% to 4.1%, a clear indication of growing confidence in the housing market. I think there's a growing confidence just with everything that's going on, with what the president's doing, with what Doge is doing, finding all this extra money that we're wasting on things that we don't need to waste it on. This is a total shift from 2 months ago when they projected only a 2.4% growth. So that's kind of what's going on with that. There we go. The initial jobless claims came out today. They rose by 11,000 to 219,000, slightly above the 213,000 estimate, but still relatively low. Continuing claims climbed by 36,000 to 1.886 million, indicating while layoffs remain subdued, finding new employment is becoming more challenging. This suggests that the hiring has slowed, making it harder for job seekers to enter the workforce. I think the other issue is now that the government is laying off people, there are going to be more people fighting for additional jobs. I mean, these people are going to get 8 months salary or whatever, and then they'll wait till the 7th month to go out and get a job. I'm just kidding. There's just so much going on. It's only been 18 days since Trump took office. It seems like forever because everything has been getting done. And I don't mean that as like I'm one side or the other. I'm just saying it's just overwhelming how many things each day is coming out that's being changed. I want them to find this waste that's in the government, the waste that they're giving all this stuff, so that we don't have to have our taxes raised to pay for stuff that we don't want. All right, so the United States home ownership, they say the younger buyers hold the key. No shit. The Census Bureau reported that home ownership rate is at 65.7%. Okay, when Bush was in office and they were trying to push us, we were trying to get the home ownership rate to 67%. And they did all those programs back then, 100% financing, blah, blah, blah. So to me, for us to be at a 65.7% home ownership rate in this market overall, I still think we're doing pretty well. Yes, more people could become homeowners, and that's what we want. They're saying that we're becoming a renter nation. I don't see that. Now, if renters were at 65.7%, then I would see us becoming a renter nation. I don't want us to keep going. I want us to keep growing and get people into homes. That is the best way to protect your payment, everything going forward, change the trajectory of your household to make sure that everybody can, buy a home. It makes people think that. So we need to make sure we keep moving forward. The lowest recorded home ownership rate in recent history was 62.9% in quarter two of 2016. So there you go. We're above that. The demand during the housing bubble years was unsustainable with inflated credit and sales figure. Foreclosures and delinquency significantly impacted home ownership rates between 2008 2016. Since 2020, higher home prices and mortgage rates approaching 8% have made home ownership more challenging for younger buyers. Despite these challenges, the home ownership still is at, like I said, at 66.21. The goal is 66.21 by 2026. That's not really that big of a push. Key factors that are supporting home ownership growth: the median age for first-time homebuyers 32. The number of Americans aged 25 to 31 is sustainable. Boomers are staying in their homes longer, keeping the home ownership rate stable. The loan profile of buyers post 2010 expansion is strong, reducing future foreclosure risk. The highest recent home ownership rate was 66% in third quarter of 2023. Figure that one out. If housing costs had been more stable, the 66.21% target would have been met already. Okay, so that just seemed like a bunch of stuff I just said. Basically, they're trying to get the home ownership rate up to 66. We're currently at what did I say? 65.7. That's really not that big of a deal to get us there. I would like to see it closer to 70%, but that's going to take a lot for us to get there. All right. So the biggest things today was jobless claims came out, and CoreLogic that's saying that the home prices are still rising and it's going up. And tomorrow we have that Bureau of Labor Statistics job report that could really change a lot. It's expected to show 170,000 jobs added in January, with unemployment holding steady at 4.1%. Anything other than that, if it comes in with less jobs added, that could help the bond market. But I think the thing that's helping the bond market, which is helping the rates, is the fact of we are finding so much waste and fraud in the government that we can cut, and we can have money used in other places. And that's what the bond market likes. They don't like wasting money. And that was the problem during the Biden administration, that there was so much money being spent, printed, whatever, going out to do all this stuff, causing the inflation. The fact that we're finding this money that we can claw back and not actually spend is helping us, because that's going to lower inflation overall. And that's what we want. All right. So I don't know if I gave you a lot of information today, except for the fact that CoreLogic saying housing is still going to go up. And the fact that overall the job market is strong. It just takes a little bit longer once you lose your job to find another job. Well, that's usually how it always is. Anyway, I hope I gave you some information today. If you have anything, reach out. Mike will be back on Monday. I'll be here tomorrow to talk about the BLS jobs report. Make it a great day, and we'll